Look, guys, either way the CPI comes out tomorrow, hot or cold, a lot of people are going to lose a lot of money because people are getting either too bearish or too bullish. And it's a problem that a lot of traders have. And I don't want you to run into that problem. So we need to look at all the scenarios for tomorrow. Today is going to be dedicated to showing you guys exactly what that bearish case is and what that bullish case is for tomorrow and which one looks more likely to happen as of, we're hours away. And that's why I'm pulling up maximum pain first, because I want you guys to see how bearish this market is for this ending week here on Friday. And if we just pull up the Qs, we have the 15th here, and we look at this put call ratio right above my head, and it is at 1.9751. That is ridiculous. And we can look where people have those bearish bets, and we're looking at where we are right now. 375 is our first big leg, and our next one would be 370. So market makers don't want it to go below these levels, and we can see that calls are far and in between. And as I look at maximum pain on the SPY, we actually see an even higher reading above my head. That is 2.3134. And we can see that our first point here is right at 440. We're sitting at 446-ish right now. So we could bounce down to that level and bounce off of it because market makers don't want the price to get below there. So you might see some buying around that area. But overall, we are seeing almost no calls towards the end of the week on this, which tells me that we possibly could see some kind of bounce. This would be possibly a bullish contrarian scenario to put in front of you right here. Now let's get even a little closer and just look at the options for tomorrow. And it looks like we have a 1.5854 put call ratio right here above my head. And you can see how bearish the market really is as of tomorrow. And this actually is a setup for a short squeeze in the near term. The SPY for tomorrow, we do have some sort of big call line here, but this is overall a bearish state because we are sitting at a 1.6086 level. And that's just telling me that people are getting too bearish. And I don't want you to be one of those people that gets sucked into a bearish things when a lot of the charts are showing that we could see a bounce tomorrow and a bigger bounce all the way into next week. I know everyone is tired of talking about yields, but around the CPI, we have to talk about yields. And the thing that we said yesterday, which if you were subscribed, you get a pat on the back and a big thumbs up because we actually said this was starting to consolidate in here, and most likely the day before the CPI, it is just going to continue to consolidate. But then I noticed that there is some sort of triangle forming, and we actually just broke that triangle, which is actually a very bullish sign. Thank you if you're subscribed. Give yourself a pat on the back. We're going to raise that thumbs up and talk about the other bullish side to this, which is if you just look at the MACD, we not only have a break and a pattern that is breaking right now, but we also see a big divergence on the MACD, and we have a big divergence on the RSI, which just tells me that this has the potential to go down, which is a very bullish thing for the market. That information I just said was very bullish. We have to pay attention to the bear side of things. Even though we're rejecting the cross on the MACD right now, that doesn't mean that tomorrow we could see a hot number come out on the CPI and then we just raise past these levels, which this is the unknown at this point. Once we cross this high, people will have a lot of fear of this unknown area, and they pretty much won't know how high rates will have to be lifted. Okay, let's look at the opposite side of the 10-year yield. Let's go into TLT, negative correlation with the 10-year yield, and we see these two lows here that could be considered now a double bottom, and we can actually maybe even confirm that soon because we are seeing this MACD curl over and get a major divergence on the MACD and the RSI at the same time. So TLT is actually hinting at us in the short term that rates are going to have to come down, which will be good for the market, and that will maybe give us a rally for about a week or so. Bearish case for this is simple. This crosses, we come all the way down and find support somewhere in these levels, and then we start to see a turnaround from there. Now we can get into the good stuff. Let's get into Apple, okay? So Apple, we actually said that this zone here is very important for support. If you go look way back, even in my old videos, you can see that we thought there would be some reaction from this support. And around here, I actually kept saying in my videos that I would like to see it dip down into that support for a double dip. It didn't necessarily happen right away, but we finally, right about here, found a little top here, and now we're coming down into that zone. We bounced off the top of it, and then we came down for our double dip. And the question we have to ask ourselves is this going to play out on the MACD here. So we have not been confirmed of this yet, but there is a divergence starting to form here. Let me redraw that. There is a there's a divergence here trying to form, and it's also showing itself here on the MACD. So if we draw it, maybe I can draw it straight this time. Okay, so if these do confirm and we get that CPI reading that is either in line with expectation or even a little better than expectation, we will see those yields start to drop off. And then that will be very good news for Apple. And Apple has the perfect setup right now that is kind of hinting at you that there is a possibility that it goes higher. This is the bullish case. On the bearish side, we're actually seeing a cross to the downside on the MACD with Apple today. So this is actually a very good signal that Apple wants to go to lower levels, but it is in that support zone, so it could pop higher. But that does not mean that a hot reading could come out tomorrow. And in the bearish case, we see this plunge all the way down to its 200-day moving average, right around 165.79 is the level that I'm looking at if that scenario does play out. Tesla looks a lot different from Apple now. It actually formed a little bit of consolidation in here. It got real tight, just like we said it would. And we said when it moves out of this, it will make a big move up or a big move down. And it decided to make that big move up because it went up like 10% yesterday. And we even gave you a price target here of 269.50. I think I said 270. And then today we actually extended a little higher. And I said that if we were around here by the time of market close, then I think that the market would be in a lot of trouble. But because of the Apple news coming in a little soft and we got this pullback here, is this pullback enough to launch us to higher levels if that CPI comes in a little lower? So the overall bullish case is we got a little pullback, we could pop higher, and how high could this pop? It actually could extend all the way up into its gap fill from a while back. And then we would have to reassess and look at it, see if there's weakness, and see if we're going to see some kind of plunge to the downside, maybe around the 20th of September. Oh, this is nice because I don't have to switch charts. But if you want to look at the bear side of things, it's important to pay attention to that scenario. We actually do have a negative divergence on Tesla. So Tesla actually is slightly hinting at us that the news tomorrow could be bad and it could tear Tesla down. And we're also seeing that pop up on the RSI. So the bear case here is if that CPI does come in hot, then we will see some sort of correction in Tesla in the short or near term. As we get into the indices, this is the SPY. This is why I'm telling you to pay attention to all scenarios right now, because this type of behavior is not giving us any signal. If any signal, it's giving us signal to the downside because it broke its most recent trend here. But if you want to hear the bearish case for this, it's simple. The CPI comes out lower than expected. People see that as good news. And then this rips up into this type of area. And if we actually zoom out, we can extend for quite some time, being like a week or so, into these prior resistance levels here with the gap resistance and then gap fill. And we even could go test that previous high that we placed up here around 459. And it's crazy to say, but we even could extend a little bit higher, possibly giving us a divergence on the daily with this high before my next catalyst, which is the 20th of September. Now, the bearish case on this is we did break that support here. We broke the most recent trend. We're about to create a new one, and this news is going to come out bad. Therefore, we could drop down, pop back up, and then drop back down into our next form of support here before we see any kind of bounce. Bullish case for the Qs, we actually did break our most recent trend line here, but we did fall into some type of support, which goes pretty far back. So it's a pretty strong support here. So if we do get a good reaction from that CPI, we could extend higher up into our nearest trend. Maybe we get a slight pullback and then we extend to higher levels, passing the gap resistance and possibly going to our gap fill. And like I said on the SPY, this doesn't mean that the Qs can't reach even higher and go to the previous high, way up towards this price of about 387.42. It means that the market has bought some time and the bad news might be around the corner instead of tomorrow. I was going to switch back to the 30-minute on the Qs for the bear case, but I'm going to leave it on the 2-hour because we did see a cross on a 2-hour MACD showing red impressions on the histogram, and we are below 50 on the RSI for the QQQ. And this just means that if this CPI number does come out hotter than expected, we could see that serious downturn for a while into the nearest point of support, which would be where our head and shoulders kind of meets up with this trend line. The VIX is something that we've gotten a lot right on this channel, so hopefully you're subscribed to see all those. But right now I'm paying attention to this level here, which is kind of sideways. It's kind of wonky, but what I'm trying to get at is we're starting to get a little bit coiled up and we are ready for a big move. Is that move going to break the tops here and skyrocket to the upside with a high CPI rating, or is that move going to come down in the bullish case with that CPI reading coming in a little bit lower? My take on it is, yeah, I would like to see it actually come back down and we do get that rally with the CPI, because we do have a lot of puts in the market. It seems like as a contrarian trader, it would be a little weird for us to have so many people winning on a crash call. But overall, I believe that the VIX needs to come down to these lower levels, fill this gap at the least, before we see volatility come back in, possibly give us some kind of, sorry, I hit the mic, possibly give us some kind of divergence down in this area with this previous low here. And then I would be confident to say that volatility is about to skyrocket back into this market. So the main takeaway from this video is I want to encourage you to pay attention to all scenarios and trade like water. See the info, see those rocks that are coming out in front of you, and then look where the main stream is starting to go and follow that side of the stream, whether it's bullish or bearish. As always, I appreciate you guys making it to the end of the video. I hope you guys have a great CPI inflation-filled day tomorrow. Peace.